This screencast is looking at Darley Limited, question 2 on the May 2014 interim assessment. So the first thing is to look at how many marks are going for the question and particularly what you're actually required to do. So there's a journal entries to record any of the relevant transactions above, and you're also asked to prepare a suspense account. So 30 marks, 30% of your paper, you have 90 minutes overall, so you're talking in and around 25 to 27 minutes depending on how much of a buffer time you want to leave. So again, it's fairly tight on time, which is reflective of the whole interim assessment, so make sure you are efficient in terms of how you go through each of the items. Particularly for this type of question, I think it's useful to take an approach where you first look at what should have been done. So you first look at what should have been done, you then look at what was done, and then adjustments required, and if suspense is affected. So that's a useful one. Now you may not need to use it in all times because some of them will be fairly straightforward, but particularly the complex ones which we come to in this question, it's useful to take that approach so you won't get confused or lost when you're trying to deal with all the different items that need adjusting. So what we're just going to do is work down through each of the items. So the first one, we're told purchase returns of €248 have been included in sales returns in error. So you can ask yourself, what should have been done? Well, if it was purchase returns, you should have debited trade payables of 248, and you should have credited purchase return of 248. So that's what should have been done. If you compare what they actually did, well, you're told they included in sales return in error. So they did the debit trade payables okay, and what they did was they debited sales return of 248. Therefore, they must have put the balancing item, again, you always have to check, have they done the suspense? They must have put the balancing item as suspense of the two added together. So, suspense of 496. Now the final thing you need to do then is make your adjustments as required. So you know the suspense shouldn't be in there as a credit of 496. So you're going to debit the suspense. Debit the suspense to clear that out of 496. Just open up this bit. And you're going to say, well then what was wrong? Well, what you should have done was credit purchase returns. So we're going to, you should have credited purchase returns of 248. And what you actually did was debit sales returns. So we need to clear out the sales return as well. So you'll credit sales return of 248, and that gives you your balancing amount that you can use. So again, it's useful to see, well, this is what should have been done. But if this line was done, I can ignore it, and then you need to make these three errors to adjust for those. So you do the alternative for purchase returns. You need to do this to get the credit in, but you then need to strip out both of these. So particularly for the starting, as you're learning, use that approach of what should have been done, i.e. here, what was done, and then finally the adjustments which are here. Now if people want to go on and do part B at the same time, fill in the suspense account, you can. I've just done over here that I'm going to do at the end. You're already told what the opening suspense is the debit balance, and then you can gradually put them in as you do the questions. I'm just going to leave them till the end, and I'm going to highlight it in yellow to make sure I know where to come back to. So if we go on to part 2, you're told on the 20th of June 2013, due to a software malfunction, the sales reps had to handwrite all sales. And for convenience, what they did was totted them all together and put them in at the end of the day. On review, the total was incorrectly totted at 24,721 and was entered in the sales amount, instead of the correct sales amount of 24,127. And you're told the clerk entered the correct sales amount in the trade receivable ledger. So what should have been done was debit trade receivables of your 24,127, which is the correct amount. And what you should have done was credit revenue, likewise 24,127. So this is essentially what should have been done. What you actually did was, well, you're told the clerk did it correctly for trade receivables, so we can bring that across. But you're told instead of putting in the correct amount, they put in 24,721 for sales. So they credited revenue or sales of 24,721. Therefore, they must have put a balancing in the suspense of debit suspense of the difference, which is 24,721 minus 24,721. 127. So that they debited a suspense of 594. However, you know that's not correct. So again, go back to, well, what adjustments are required? No adjustment for trade receivables. Revenue should have been credited this. It was actually credited this, so it was over credited. So we're going to reduce revenue by the difference of 594, and then to strip out suspense, we're going to credit it by 594. So again, you see we're using the basis here to make our adjustment. So be methodical, go down through each of them and identify what the suspense element is. And again, you can either do part B now, or you can leave it until you're finished and do them all at the end. Part 3 then says an unpaid invoice of $850 relating to rent was charged to rates in error. So what should have happened would have been debit rent $850, credit trade payables, because remember it's unpaid, $850 in your current liabilities. What actually happened was it debited rates $850 and they credited trade payables $850. Okay, so actually there's no adjustment here for suspense. You only have to make the adjustment for the rent and rates to swap them around. So in this instance we need to strip out the rent because that was incorrectly expensed. So we credit the rent account in the P&L $850 to reduce our expense, and then we will debit the rates account, which we need to make an adjustment for, of $850. And so you'll note there that was a relatively straightforward one. Is there's no suspense adjustment here because all you're doing is you classified it in the wrong expense account as opposed to making any fundamental error. So again, there can be times where there's actually no real major adjustment to be made, and it may not be beneficial from time perspective to go through all those. But I'm just doing it to show you how it's applied. So moving on to question 4. Payment of $6,923 was made to a supplier, D. Callahan, but the bookkeeper incorrectly allocated the payment as a receipt to the customer account. So instead of treating it as payment to a supplier, the bookkeeper treated it as a receipt from a customer. So what should have happened was you debit trade payables to reduce the amount that you owed by customers as 6,923, and you would credit your bank because you should have paid the customer. What actually happened was you would have credited bank 6,923, but what you did was you credited trade receivables, because remember, if you're treating it as a receipt from a customer would be reducing your trade receivables, i.e. with a credit balance. So that should be credit 6,923. Therefore you must have put a debit on your suspense account of the total of these two to balance it up. So you must have put a debit on your suspense account of 13,846. So that's what should have happened. What did happen, I mean, that was a tricky one to make sure you read it carefully, that it was treated as a payment of a receipt. So it was treated as to say the customer was paying you, which would have been a credit balance. Final thing is the adjustments you need to make. Bank is okay. Trade payables needs to be debited. It wasn't. So we will debit trade payables 6,923. Trade receivables was debited, or was credited should I say. Therefore you need to debit that to reverse it of another 6,923. And you will see then by crediting the suspense of the balance of 13,846, you are stripping out the impact that you already had. So again, it should always work out that it should strip out the suspense impact. Just make sure if it doesn't, you go back and you watch your debits and credits. That's very important here, is that it can easily get confused, particularly in an exam setting. So now we have another highlighted part of a credit suspense of 13,846 that will now be used for our part B. Next one, part 5. We're looking at the auditor's identified invoices received post year end that should have been included, so accrued expenses that weren't put in. The invoices relate to light and heat 389 and a telephone bill. So it should have been debit light and heat 389 and debit telephone 416, and finally then you'll credit your traders payables or accrued expenses, either or, for the total. So essentially it's just accrued expenses that weren't accounted for. What has been done was actually nothing. there's been nothing done so far. So again, another fairly straightforward one is, well actually if there's nothing done so far, all you need to do is these 3 entries. So you can bring those down and say, so again, don't be worried that you're not always going to have suspense account likewise up here, and sometimes there will not be adjustments to be made. So that was a relatively straightforward one, is that you just need to make those adjustments for accrued expenses. Okay. Next one we're looking at now is part 6. This is a longer one which is pretty involved in terms of a disposal of an asset. So you're told, Darrell sold a vehicle on the 1st of April, so you can always, when you're looking at financial reporting questions, watch for the dates, for 10 grand. Truck cost 26,000 on the 1st of July 2010. Depreciation policy, which is important, from the date of purchase to the date of sale. So not full year, it's from the date to the date, so there will be months. Depreciation is 20% straight line on cost, and the bookkeeper made the following entries. So they just debited bank, debited depreciation in the P&L for 2013, and credited suspense. So really, when we're dealing with a disposal of an asset, the first thing is to figure out, well, what was its net book value? What was the net book value at the date of disposal? You know it cost 26,000 on the 1st of July 2010. So how many months depreciation are you going to have? Well, for 2010, 2011, 2012 and 2013, we look at the number of months. You're going to have 6 months depreciation in 2010 should I say, because you bought it halfway during the year. 2011, full 12, likewise for 2012. 2013 you only have 3 months, January to March. Adding them up means you have 33 months. So that's important to figure out what the depreciation is. 33 months, 3 of which are in this year's accounting statement. So that is important because that will have to mean depreciation charged to 2013 income statement. So that is an important distinction as well. So overall, the accumulated depreciation will be 26,000 times 20% times 33 months over 12. So you can do it various different ways to calculate the depreciation per month. I'm just doing it on an annual basis. And that essentially says the accumulated depreciation over the 33 months is 14,300. Of that, 2013 depreciation would have been 26,000 times 20% times 3 over 12. Means depreciation this year was 1,300, which again matches the depreciation that they've charged in their question. So now we figure out, well, what did we sell it for? We sold it for 10,000. So net book value, well, we started off with 26. We know the accumulated depreciation is 14,300, therefore the net book value was 11,700. So you sold it for less than what the book value is, therefore you're going to have a loss on disposal of 1,700. So again, there is a bit involved, particularly around the disposal of the asset, that you need to make sure you work out all the relevant items first before you start attempting the double entries. So now we can attempt to actually, what should have happened? How do you account under basic IAS 16 for the disposal of an asset? Well, you're going to credit PPE, or motor vehicles we'll call it, for 26,000, because that is the cost of the asset that would have been on the books. You're going to debit accumulated depreciation of 14,300, which you already calculated, because remember that's a credit balance, you want to strip it out. You're going to debit your P&L for loss on disposal of 1,700, because you already calculated, and remember a loss on disposal will be an expense. You're going to debit your bank 10,000, and that is essentially the cash that you would have got in for the selling the asset. Now the other one that students may have forgotten about is excuse me, for 2013 you also need to charge depreciation. The accumulated depreciation is 14,300, but debit depreciation in the current year in the P&L of 1,300, and then you must credit accumulated depreciation to account for that in the balance sheet of 1300. So it's useful then just to double check your balancing and you decide 27,300 and 27,300. So that's what should have been done. We know what has been done, so you'll debit bank, the debited bank 10,000, the debited depreciation in the P&L 1,300, and then the credited suspense of 11,300. So see now, the fact that we know what should have been done and what has been done, it's very easy to figure out the adjustments, and that's why particularly for the complex items such as here, you're better off to go with this approach. Yes, for example up here you may not have needed to go these approaches, or for the easier ones up here, but particularly for the longer ones I suggest give the time and effort, because otherwise you'll get confused, particularly in an exam setting. So firstly we know we need to strip out our suspense account. So debit suspense 11,300, bring that down. We needed to the bank, and the bank has already been done, and depreciation has already been done. So other things that need to be done is the motor vehicle. So credit motor vehicle 26,000. Other items that need to be done, well the P&L loss wasn't accounted for, so we need to debit P&L loss of 17. Depreciation for the year was accounted for. Accumulated depreciation wasn't stripped out here, so we need to debit accumulated depreciation 14,300, and the final item that's not accounted for is accumulated depreciation in the current year. So they charge depreciation but they don't put it into accumulated depreciation, so we can bring that down and drop it in. So you'll notice then we have 27,300 on the left side and 27,300 on the right. So one point to note when you see the solution is they only put 1,300 in here and they leave out the accumulated depreciation for the current year. Both will get you to the same result. I would argue that this is more appropriate in that you need to capture the 1,300 for the current year as well. So just in case you're confused about what the difference is, that means is I am accounting for the 1,300 that has been accumulated up this year also. Again, you get to the same answer, just to be aware of that difference. And again, for part B, we just highlighted the suspense of 11.3. Final one we're looking at then is point 7. Point 7 says, customer finally paid 2,450 to clear his account. So Darley had previously written off this as a bad debt, and the amount has been lodged and accounted for correctly in the bank account, with the transaction also included in suspense. So the first thing, what should you have done? Well, it should have been debit bank 2450 and debit trade receivable 2450. Then you will credit bad debt recovered 2450, and you will credit trade receivable 2450. Now some students might be asking, why did you bother doing debit trade receivable and then credit trade receivable? Well, in the broader scheme of things here it won't make much difference, but technically it's the right approach to do, because if you don't account for that and you go straight debit bank credit trade bad debt receivable, you will never capture that this customer actually paid you in the accounts. Therefore, if you go to do business again or look at their history, you will never capture that they've actually repaid some of that bad debt. So while it may seem a duplication here, it's actually done on purpose to make sure you capture in that person's account that they've actually paid something back. But again, on a net basis, it doesn't have any impact. What has been done, it has been debit bank of 2450, and what they did was credit suspense. So overall, the first thing is, well, what you need to do is you need to strip out the suspense by debiting it 2450, and you don't need to make the adjustment for trade receivables, they knock each other out, but you do need to make this adjustment for bad debt because it hasn't been here. So you'll credit bad debt receivable in the P&L, essentially again, because you've already written it off to the P&L at 2450. So now we'll put the yellow there, and you've essentially finished part A. Part A is prepare the journal entries required for each of the items. So we have the journal entries done for part 1 all the way to part 7. And you've been efficient in terms of you have labelled either by an asterisk or, as I've done here with a yellow highlighter type thing, that you know now which items are relevant for part B, which is prepare the suspense account showing the corrections. And the point is here, when you should prepare the suspense account to make all the adjustments, the suspense should be cleared out if you're correct. So suspense account here, part B, we call this opening the balance. We're told is 194 on a debit side, And now I'm just going to make adjustments down along for part 1 to part 7. So note 1 suggested a debit suspense 496. Note 1, debit 496. Okay. Now again, what you want is, instead of putting note 1, you might put sales return and then put in brackets note 1, just to cross-reference. I think either are acceptable. It's entirely up to you. Just make sure you cross-reference where the adjustment is coming from. The next one we looked at then is note 2, and we credited suspense 594. Note 2, 594. Next one is note 3. We didn't have any suspense adjustment, it was just transferring between rent and rates. Note 4, we had credit suspense 13846. So note 4, 13846. And again, what you might put in here is the description of what was that adjustment. It was incorrect customer accounting or incorrect supplier payment. So note 4, note 5, we didn't have any adjustment because there was no adjustments made to the suspense account. They just had to be done from scratch. Note 6 was the transfer or the sale of a equipment or a truck, and the suspense here was 11.3 on the debit side. So note 6 of 11,300 on the debit side. So you see, it's very clear to the examiner. You know exactly where the adjustments are coming from. And finally then note 7 is debit suspense 2450. So note 7, 2450. And hopefully then you'll know if you're right, because the suspense account should balance out. You add them together, you get 14440, and you add them together and you get 14440. So again, that's always a sense check, that if they aren't balancing out, go back and double check each of your items to make sure you've accounted them correctly. So again, not an overly difficult question. For 30% of your paper, the important thing is to have a structure. And one point students should note is, just because if you couldn't tackle point 6, you could skip on and you could do the rest of them and slot them into your part B, the suspense account. So particularly because you're so caught on time, do not overly dwell on some harder aspects. Get as much as you can done first, and then come back to the difficult aspects when you have time at the end. Okay, so that was question 2, May 2014, dealing with journal adjustments and also a suspense account.